Vineyards. The banks and the IPO market basically provides the oxygen to fuel the growth of companies, whether they're small or emerging growth companies. But here the news in startups, for example, is not good. The annual rate of business startups is 28% lower, 28% each year lower than it was in the 80s. So something's happening. Now, you can't pin down the relationships mathematically, but I think it has something to do with Jay's arbitrary regulatory regimes, where we've got a hostile environment. We have a president that says, you didn't build that. We have the 1% issues. We have crushing regulations, Obamacare, and we talked about Dodd-Frank. And what it does when you have a regulatory regime like this is that it really protects the existing bigger businesses and harms the smaller businesses that can't afford to comply with it. So it not only affects new business startups, but affects productivity and the growth of the economy and the innovation that we need to make a vibrant society. On the community bank front, the news is even worse. We're now down to about 7,000 banks in America. That's down from 18,000, lowest level it's been since they started keeping track in 1934. And what's happened here? Well, in part, banks got in trouble because of the real estate crisis, but the bigger issue is the regulations that have been coming out of the FDIC and the other regulators have been piling burden after burden after burden on these small banks. There's one small bank in Kentucky. It's United Southern Bank that its assets are about $250 million, and it's the same size it was about 4 or 5 years ago. They've had to add 15 people to the back office to comply with what they're being asked to do with the regulations coming out of the federal government. Why do we care? We really care because community banks are the engine for small business, and that most of the small business credit in America comes from community banks. They represent about 46% of the small business loans in the country, but only 14% of the assets. So they punch way above their weight in terms of financing the small businesses and the farms and rural communities, particularly in America, now that the bigger banks have been shutting some of their branches. And they're not only going out of business, but since 2007, how many new banks have been formed? 1. Since this year, how many new applications do we have for a bank? 1, in American Samoa. So those of you traveling to American Samoa, I've got a friendly banker we can talk with there. Another way to think about it, this regulation and the burden that's on everybody, is it's going to take 24 million man-years to comply with Dodd-Frank regulations each year. It took 20 million man-years to build the Panama Canal. Quickly, public companies. The number of public companies in the U.S. has been declining. Roughly 9,000 15 years ago. Now they're about 5,000. The biggest single reason there are fewer companies listing in the United States is the regulatory regime, Sarbanes-Oxley, 401, Reg FD. As I ran a public company, I could go through a list of 20, 30 things that are chilling in terms of how much time you have to spend on regulatory matters. So what do entrepreneurs do? They don't go public in the United States. Where do they go public? China.